Hi, I'm Yusuke Enomoto from GMO Financial Gate Inc. I am a Chief of Corporate Planning Department of the company. It's my pleasure having this great opportunity. Today, I'm going to talk about the company profile, business model, growth strategy, and financial highlights. First, I'm going to talk about basic company profile. GMO-FG was founded in 1999 as debit card processing center. At the time, shareholder of the company was not GMO Payment Gateway. But in 2015, GMO-FG was acquired by GMO Payment Gateway. GMO-FG is providing services in face-to-face offline cashless market in Japan. On the other hand, our parent company, GMO Payment Gateway, is providing e-commerce cashless services and operating in Japan and outside of Japan as well. That's why GMO-FG is independent from GMO Payment Gateway in terms of business decision-making and business resources and any kinds of business regulations. GMO-FG went public in 2020. We are traded on Tokyo Stock Exchange growth right now. So this slide shows the shareholding relationship among the affiliated companies. Approximately 57% of our share is held by GMO-PG, and we have two consolidated subsidiary companies. One is GMO Card System, another one is GMO Data. GMO Card System is mainly providing services for SME long-tail merchants, and GMO Data is a joint venture with Sumitomo Mitsui Card Company. GMO Data provides processing center services. Next, I'm going to talk about their basic business model. There are 3 types of business categories and 4 types of revenue streams. We provide terminal sales business, payment processing business, and acquiring business. We procure payment terminal from many kinds of terminal manufacturers and sell them to card companies or merchants directly. Then we realize initial revenue. After that, once the terminal gets activated at the merchants and the consumers buy something by cashless payment at the stores, then the payment information connects to our processing center. Then we realize stock model revenue. From the three types of business, we get 4 types of revenue: initial, stock, fee, and spread. In last year, FY 2022, approximately 70% of the total revenue was coming from initial revenue, which was mainly the sales of payment terminals. As we are trying to penetrate in the market, now we sell payment terminals as much as we can in order to increase our market share. So the percentage of initial revenue is the highest out of total revenue now, but terminal sales will lead us to the expansion of recurring stock model revenue in the future. That's why our business visibility is getting higher and higher as we streamline this business model. As I said in the previous slide, initial revenue is the majority of total revenue for now, and it's hard to predict when and how many terminals will be delivered to the merchants. Maybe some quarters get high concentration of terminal sales, and some quarters don't. These business characteristics bring us bumpy total revenue trends quarter over quarter, even though the stock model revenue will show incremental growth trend quarter over quarter. Meanwhile, the revenue of GMO Payment Gateway tends to shift smoothly quarter over quarter. This is because GMO-PG itself doesn't sell hardware product like payment terminals. This is our recent revenue trends. The left-hand side is initial revenue, and the right-hand side is stock model revenue. As I mentioned earlier, we can see some fluctuation feature in initial revenue. There are some reasons why initial revenue goes up or goes down quarter over quarter, but the reason is case by case, and we don't think this trend as irregular. We see this trend as normal. That's the case. And on the other hand, stock model revenue is growing up steadily quarter over quarter. And in the second quarter, which is March quarter for us, we normally observe weak market trend because of its seasonality. But basically, stock model revenue will show us incremental trend in the future, as long as we sell new payment terminal to the merchants. Next, I'm going to talk about the monetization opportunities, monetization points. Basically, we can maximize our revenue opportunity when credit cards are used in the stores. But not only credit card, but also e-money, QR code payment, and any kinds of payment, any kinds of points payment in Japanese market, we can monetize. This means we are not relying on specific kinds of payment methods. This diversified monetization points bring us stable growth trend. Next, this slide shows players in offline face-to-face cashless market in Japan. In this market, we are offering payment processing center, and we are collaborating with terminal manufacturers, POS vendors, payment network companies such as cafes and JCN, acquirers like credit card companies, banks, and merchants. We are trying to penetrate in the market by promoting alliances with these alliance partners. Now, I'd like to dig more about the Japanese regulation of processing center. In order to become our processing center like us, there are some regulations that we have to meet. These regulations bring us great opportunities collaborating with major financial institutions which have big customer base in Japan. Due to these entry barriers, legacy financial institutions likely to choose us. This is because they can enjoy our know-how and system. Creating a processing center from scratch is not efficient enough for them. So these regulations are the important barriers in this market. Next, I'm going to talk about our growth strategy. Left-hand side in this slide is our addressable market. Now we are operating only in Japan, and the size of estimated addressable market is about 95 trillion yen. Our GMV last year, FY 2022, was roughly 2.5 trillion yen. So our market share GMV basis is still only 2 to 3%. And this and the total market size, including cash payment, is about 278 trillion yen. So this means we still have big white space to penetrate. And important things here is the cashless penetration. Cashless penetration rate in Japan is about 32.5% for now. About the US, it is about 47% in 2018. And about the UK, it is 57% in 2018. That's why Japanese government is providing some initiatives to push up the cashless penetration rate. The target of cashless penetration is about 40% around 2025. And in the longer term, the final goal is set at 80%. This is tailwind for us to grow faster and stronger. This is a snapshot and the breakdown of Japanese cashless payment market. The table on the left, which is a transaction value basis, approximately 85% is credit card in 2021. As I said earlier, credit card payment will maximize our monetization opportunities rather than other type of payment. So this market condition is pretty good for us. Having said that, we still have monetization opportunities in any type of payment methods. That's why we are okay with QR code payment as well as e-money like growth. We can enjoy every kinds of payments growth. This slide shows our midterm target. In FY 2025, we aim achieving 1.5 billion yen in OP and 5 trillion yen in GMV. In order to make it happen, we have 4 initiatives written in the slide. First one is acquire multi-industry high-growth enterprises by launching next-generation MOT payment terminals. Second one is expand IoT payments by supporting contactless and unattended payments. Third one is acquire large accounts through expansion of alliances with QR endpoints. And last one is strengthen our value proposition by reinforcing processing center functions. By promoting these initiatives, we're going to achieve midterm target for FY 2025, and we also plan to grow 25% CAGR in revenue for FY 2026. Yeah, this page shows our competitive advantage, which is Stellar Gateway. We created this new type of processing network with Sumitomo Mitsui Car Company and Visa in 2020. With this network, merchant discount rate, we normally call MDR, can be lower than traditional Japanese MDR. Basically, we used to have only one type of payment processing network, which is on the upper side of this slide. In this traditional legacy payment network, there are many points we have to pass. This means network cost likely to be high because of its multi-layer process. It's just like toll road where we have to pay on driving highway. On the other hand, we created more simplified and more global standard type of processing network, which is Stellar Gateway. By offering lean and less processed payment network, acquirers such as credit card companies and banks can lower the network cost. With this cost reduction, acquirers can lower MDR to the merchants. This is how it works. Now we have 2.5 trillion yen in GMV. Now we have 2.5 trillion yen in GMV, and Stellar addressable market is approximately 26.5 trillion yen, which is shown as green level here. So we still have big white space. An important point in this slide is the addressable market of alliance partner is also growing year over year, linking with the cashless penetration growth in Japan. So as we are not dependent on specific industry, our customer base is well diversified. Now, Japan is getting more normal towards pre-pandemic situation, so the industries affected by COVID-19 are now getting recovery. And the industries such as leisure and tourism are also recovering due to the lift of immigration restrictions at the airport. So now inbound demand will contribute our business as more foreigners visit Japan going forward. I have to describe one more topic here. That is expansion of small amount of payment. Historically speaking, Japanese small amount of payment, such as dollar shop, public transportation like train and bus, and beverage vending machines are only paid by cash, not cashless. And this is because MDR was not affordable with those small amount of payment merchant. But with the lower MDR generated by Stellar Gateway, I just talked about, now it became possible because of its cost reduction. This slide shows how we operate to the merchant. Like I said, we have 3 types of basic business. First one is payment terminal, second one is processing center, and the third one is PSP service, which is also known as acquiring services. We call these 3 types of basic business model as horizontal business. On top of that, we are trying to expand vertically as well. It's kind of difficult to acquire large account merchants with just providing commodity services like horizontal solutions. These large accounts usually already have some existing cashless infrastructures, POS system, etc. So we offer tailor-made cashless system based on the request from these kind of large merchants, so that the system we develop can be coordinated with existing cashless infrastructures they have. This vertical expansion enables us to acquire large merchants. This is the last chapter of my presentation. I'm going to talk about recent financial highlights and KPIs. As you can see on this slide, we have been growing steadily in OP and GMV. About OP, we are trying to achieve 1 billion yen in FY 2025, and about GMV, 5 trillion yen at the same time in FY 2025. This is a number of active terminals, which is very, very important KPI for us. Stellar Terminal is included in manned terminal at the bottom of this bar chart. We launched the Stellar Terminal in Q4 FY 2020. So this is the most powerful driver of active terminals. But at the same time, we have been accumulating other type of terminal as well. So we are not biased on specific terminal. These are the historical data of transaction volume and GMV. We have been growing nicely, both in transaction volume and GMV. Our target growth rate year over year is about like 50% per annum. So we have been overachieving our target continuously. That's all from me. Thank you for taking the time and listen to my presentation. I hope it helped you understand about our company. Thank you.